Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And the weather report here on the coast is blue skies, sunny, warm, but there is no surf. So let's dive into the charts yet again. This time we're looking at the headline of last time this happened in crypto, Bitcoin investors lost big in the bear market. This is coming to a point where we are probably rounding that bottom of the bear market. If you've been on my channel for some time, which you should by hitting that like, subscribe, bell notification icon, I'll remind you at the end of the video as well in case you want to see what's coming up next. You'll know that we've been talking about this bottom for some time. June was that first dump into the low for Bitcoin, and it was a significant dump for the S&P, so the major traditional markets around the world, the US market there. We've had a secondary low for Bitcoin, potentially a higher low. So this could be a very bullish sign, and for the S&P, it was a lower low, yet this is coming into part of the cycle where we're expecting a low. So at this point, there are a lot of people expecting much lower prices. Now, I've done a ton of videos on the channel looking at we could be going to 10K. What if we don't go to 10K? What are you going to do? All those sorts of things. So if you haven't, make sure you jump onto the channel, subscribe. And look, this is really, really fun to do. You click the like button. It gives you like this flash pop-up of fireworks. All right, check it out down below. The big thing here is that this could wreck a lot of people, and it has done in every other cycle, whether it's Bitcoin, whether it's the traditional markets, whether it's real estate. It happens every single cycle, and it is part of a cycle. And unfortunately, the vast majority are going to miss out because this is just how markets work. It's how the human emotion gets caught up in what is actually going on in the market itself, who's buying and who's selling. There's a lot of hopes and dreams, especially from newbie fundamental analysts, maybe people who are more focused on what the news is telling them. And by the time the news flips, you're basically running up into this peak. And so at these lower prices, what we want to look at today is signals of the market telling us that we're about to explode. Yes, it could be a big explosion, could be a smaller explosion, but either way, it's going to wreck basically anyone who is waiting for much lower prices. And so with that in mind, let's first have a look at what happened to Bitcoin previously. And yes, we do need to keep in mind some dates that are coming up next week. Have a quick look over at our trusty Forex factory here. The big stuff coming out next week for the US is congressional elections, Wednesday, 9th of November. This is in my time zone, so that's all day. It's going to be the 8th for you guys in the US. And then later in the week there is CPI, core CPI. This is like all the stuff that everyone froths over to hear what the news is coming out. Is it going to be what they're expecting? Is it going to be what's last time? Is it going to be less or more? All this sort of news and noise that comes into the market. And hopefully you're starting to get the picture that what we've seen last time, we had the inflation data come out this week, or basically the interest rate rise. And what happened to the market? I mean, we dropped and now we've hit the 50%. We're getting this small little bounce going on here. So it's not like we put in a brand new low. If that news was extreme, you probably would have expected the market to dump a little further. Maybe not. I mean, that's up to you. But the point I'm making here is the news always is the last to know. The news, anyone who's following the news and sort of picking pieces of data from everywhere else is really not putting together a consistent plan. And that is then how these sorts of events happen in the market. And by these sorts of events, I mean just how these lows are formed and then the market takes off without a lot of people. Basically, the bottoms have been bought and then the markets take off. So let's turn across to our Wyckoff schematic as well. So we've got the accumulation schematic. This is basically what we're following here for the Bitcoin low. This is the monthly chart. We have been working off the weekly chart just for that little bit more data, but not as much noise as the daily chart. Okay, so you're going out to a bigger time frame. It's going to give us less noise. So the accumulation schematic is basically just showing us a trading range. The main thing we want to take out of this right now is a trading range of this particular schematic. And yes, the prices can go a little bit lower than the selling climax, the SC, which is what we've been looking at for the June low, being that selling climax. We haven't seen lower prices on the spot chart, but we have seen lower prices for Bitcoin on the futures chart. Okay, so this can go a little bit lower. Maybe we do hit the 15 or the 16K. Either way, in terms of a percentage, it's not that much further down, and to wait for it, I think, is probably a fool's game, especially when the timing has been working out so well for this period of Bitcoin being this potential low. Maybe it does dump a little bit lower, but basically the timing is around about now for this low to be in already, if not, comes up quite soon. So the monthly chart is what we want to have a look at next, and the area of importance here is where the market bottoms and then rushes off. And what we saw in that last cycle, and I remember sitting through this particular period, is we had lower tops, then we had the breakdown here from the lows at around 6K. And I think this is what a lot of people are waiting for this time. They're waiting for this big dump to happen on the markets because it happened last time and it happened the time before, but not factoring in that maybe this was the big dump. We had a very, very big dump in June, and we also had a big dump in May, which wasn't something that we saw in the previous cycle. So we didn't have a very big dump of 50% in the 2017 bull market, but in the 2021 bull market, we had a very big dump here of, it was just over 50% from that top, so 55%. So that's something a little bit different. It rhymes because we did have corrections in the bull market, but it was a bit bigger than what we saw in the previous cycle. So although cycles rhyme, they don't have to repeat exactly. And the previous bull market is a clear example of that, of markets do have corrections. That's normal. We do have price pumps, normal, but they don't have to be exactly the same as that previous cycle. And so I just want to pay attention to that, bring your attention to it, that maybe we don't get this extreme dump. Maybe we do get a little dump that goes to 15 or so grand, but maybe we don't get that huge one down below. So then what follows next is an accumulation period. So just looking at this little zone here as the market held out for 1, 2, 3, 4 months before starting to get that breakout in April. And from that first pump, the market jumped 340%. So that started to put in a trading range for Bitcoin between 14K and the bottom being 3K. And if we look at where most of the action occurred, it was between the close of the June bar at around $10,000 to $11,000, and then the lows of the pandemic. So that was around 6 grand. So overall, it's a pretty small trading range. And if you want to include the accumulation zone all the way back, then you're basically between $3,000 and $5,000. And that only lasted 4 to 5 months. The drop in March was a godsend for anyone looking to buy cheap Bitcoin again. So if we don't get a black swan event, I would not expect to have this sort of event happen where it just wipes out the lows and then takes off from that point. Either way, it was very quick. And if you remember, it was extreme. Everyone thought the market was going to go down much, much further, and the show was over. We were going to be in this long multi-year bear market because of a pandemic, and that was not the case. And so moving forward, yes, we've got a lot of world events that are happening, but for some reason, for the last 1, 2, 3, 4, 5 months, the market has just not given us lower prices, or in the case of the S&P, much lower prices. So only a touch here. So even if we did get that slightly lower, for the amount of pain and suffering that we are told is out there, I'm not trying to discount anything. Everyone has their own, story to go through, but from what is happening in the market, we have to separate the emotions right now. What is happening in the market from buyers and sellers is two very different things. What the buyers are doing and what the media is trying to do with our emotions, two very, very different things. And so what we saw last time from that point, we got the pump up. And I do know from personal experience, I got caught in this as well. I thought we were going to see some sort of rejection here at the $6,000 level. I thought maybe we wouldn't pump up anywhere near as fast. And I know many friends that were also getting into this thinking that we were going to go to 20 grand quite quickly. It just seemed unrealistic for the market to go from quiet to a multi-year bull market just like that. And so what happened is a lot of people bought big positions at this time only to see the market fade out again. And should this not have happened, then look, we would have had a bottom around $6,000 or $7,000. So it's still a 50% decline from 14K to 6 or 7K before the market eventually took off. And this whole period took over 12 months to play out. And so this actually wrecked a lot of people within a bear market that had the opportunity to buy low, but they decided to wait for lower prices because the old top was back here and they were just expecting that the market had to come back and test somewhere near the old top at around $1,000 or $1,200, and it didn't get anywhere near that. Whereas this time we got back to test it, and now everyone's saying we have to come back and test $10,000 or below $10,000. And you're probably getting the gist of this now. It may not happen, and to risk that not happening and then watching the market push higher and break past the weekly swing tops could be a pretty big mistake, especially if those emotions get involved from this point and we come up to test some of these lower levels again, somewhere around these lows of 29 or 28,000. Maybe we even get a breach back above to around 33 or 34K. But of course, we've got a few levels to get through first. But even if we were to see that, that would then put this market from here into a much stronger position. This would basically be back into a macro uptrend. Didn't say bull market, but a macro uptrend for Bitcoin, breaking that previous weekly swing top. And that's where you start to get the FOMO of how this can happen and come back and test these prices, only to see over the course of several more months, the market fade out again. And you get the same people who bought on the breakout here start to sell on the way down and cycle rinses and repeats. So they were here at the right time, just making the wrong moves. So in the two previous cases that we have of the cycles here of Bitcoin, the market pumped up 340%, which gave us a pretty big trading range. And there's a lot of errors that can be made within such a large trading range, especially with our emotions. In the previous cycle to that, so going back to 2015, the pump up, basically giving us a trading range of about 100%. Here you can see 93.4 was much more tight. And we stayed within this tight range for 1, 2, 3, 4, 5, 6, 7, 8 months. And then we only had that crash down in August that gave us just that quick entry before the market took off from that point. In each of these cases, the monthly swing tops were broken. You can see that in 2015 and 2019, we had a break of the monthly swing tops. And that basically signaled that the bear market was over and we're now into a trading range. And this is where things get a little bit trickier because we do get some breakdowns of the monthly swing bottom and more accumulation, distribution, and choppy periods. So this is still probably what's ahead of us for 2023. But this is the big period, which I think is coming up next after we get through this potential accumulation zone, which catches a lot of people by surprise, thinking that we are back off to the races just like last time. To stay ahead of this, watch the monthly swing tops and bottoms. This will give you an indication of whether we are breaking out of a bear market and then the trend is turning. It's just like the tide's turning, going from tides coming in to tides going out, but you get that period of changeover. And this is a nice signal to let you know that we're about to change over, but it doesn't mean that we have to rush right to new all-time highs. That indicator is a Gann swing indicator. Link is in the video description if you guys want to use that. I found it extremely helpful for my trading and investing over the last 12 years since I've been using this tool. This particular tool works in all markets. You can see the example here on the S&P 500. We had the downtrend after the dot-com bust in 2020 and the market's heading down, monthly swing tops. And then all of a sudden you get a breakout of the monthly swing top with a higher low as well, which is quite a bullish signal. If you're getting a higher swing bottom, meaning the buyers are stepping in higher than they previously did, bullish sign. You get a break past the previous top where the sellers stepped in, bullish sign. Then you get the buyers and sellers coming to a bit of a standstill, but the buyers are stepping in higher again above the area that the sellers once sold out at. So now the buyers are buying up higher than the previous top. That's why this tool is so powerful on the macro chart. If you're looking to buy and sell longer term, this tool is something that you definitely need, the TI Gann swing indicator. And so once this occurred, this is in the S&P 500, basically going back that 20 years to, I think, where I think we are right now in the market. This then led on to that next stage of the bull market for the traditional market. So you got the NASDAQ and the S&P did this right here, breaking out of that zone, testing it, and then taking off for that next stage. Bitcoin has done a similar thing here, broke out of the downtrend, tested those lows again, took off for that next stage of the bull market, which lasted multiple years. Going back to the previous cycle, breakout of the bear market of the weekly swing, the monthly swing tops, testing it, trading range. Then we take off to a multi-year bull market again. Could that happen again? For sure. Is it going to look exactly the same as last time? I doubt it. Nothing looks exactly the same, so keep that in mind. And one more that I love to invest in for the long haul that I use in my retirement fund is Ethereum. Same sort of deal here. Monthly chart, monthly swings, turning on the indicator. And you can see that we had the breakdown. The bear market lasted about 11 months. You get the higher low, the breakout of the monthly swing tops. This happens to wreck everyone. Everyone's trying to buy in on the FOMO. And then over the course of several more months, we fade out again, giving another opportunity to buy at slightly higher prices, mind you, but it is giving you that first signal that the bull market is more than likely over at this point. And now we just have to go through a period of sellers understanding that before the market takes off yet again. And so are we in that stage? Like I said earlier, it's possible, but we need to wait and see for this next confirmation. If that happens, we get this move up past around $2,000 on ETH and also breaks the bear market downtrend. You can bet this is going to get really, really hot for a lot of people, and they'll start to buy in at much higher prices, only to see it possibly fade out yet again to give us that re-entry signal and trading range over the course of 2023 before we can start to make that move higher towards that next bull market. The main thing to be on the lookout for is, will this monthly swing top get broken? If so, then we can start to count how long it could take until the next bull market takes off. The breakout, that's when we see the fastest profits being made in the shortest period of time, that next breakout after that accumulation period. Stay tuned to the channel, subscribe, bell notification icon, and if you did enjoy the content, get those fireworks going off by hitting the like button. Videos are popping up here. Check them out. I'll see you guys at the next video. Have a fantastic weekend. Until then, peace out.